Welcome to your weekly market update where we talk about everything mortgage and real estate related. Some great information to talk about, so let's jump right in it. First off, the Case-Shiller Home Price Index, which measures the home appreciation in the United States and is considered the gold standard, showed that home prices appreciated by 0.4% in March. That was following a 0.2% increase in February, clearly showing that we are past the inflection point of home prices and they are on the rise once again. To reinforce that, FHFA, which is the Federal Housing Finance Agency, released their housing price index, which measures home price appreciation for single family homes with conforming loan amounts. And that's different than the Case-Shiller Index, which also includes cash buyers and jumbo loans. The FHFA reported that prices rose 0.6% in March, following a 0.7% increase in February. So home prices now, from the peak of June of 2022, are up by 1%. So that is a great sign. As you know, home values are very strong. If you're out there looking right now, you can see that there's not a lot of inventory and there's still strong demand, which is keeping home values at where they're at and showing an increase. Now, this all helps and reinforces our prediction that home values will increase about 5 to 6% for the full year of 2023. So we'll keep a close eye on that, continue to update you weekly on housing going on in this country. As for mortgage and inflation, so mortgage bonds are higher once again. Yesterday and today, we are finally seeing a nice bump in the mortgage bonds, which is helping interest rates go down. So when the price of a mortgage bond goes up, it drives down the price of the interest rate. And so we've seen that the last couple of days. That all has to do with the fact that the debt ceiling appears to be a sure thing. Bonds are starting to follow the fundamentals, which of course includes inflation, and there is some inflation data that indicates that we're pointing lower on inflation numbers. Oil prices are down to under $70 a barrel, which will help inflation. Used cars the valuation of used cars are slowing down. They're only up 0.8% in May, which is a much smaller pace than they've been in the past months. And then rental costs has been coming down as well. So all of those factors are going to help the inflation data, which will then help interest rates, which is what we've been talking about over the last couple weeks. So what has happened from last week is that mortgage applications went down 3%. That was last week because interest rates have been rising. So usually when rates go up, the demand comes down, which is why we're seeing applications down 3% last week and down 31% over the last year-over-year 12 months. Now, interest rates increased last week from 6.7% to 6.91% on average, but just the last couple of days, we've seen interest rates drop about 0.25%. So we're heading in the right direction. It's just very important in this tight inventory market to get pre-approved, to have all of your ducks in a row and be ready to make that offer on that property when it comes up, and obviously get locked into the best terms that you can under the current market conditions. So call me if you have any questions, mortgage, real estate related, 847-942-1497. Bye.